Welcome back to Dummy Boy Finance. I'm Dummy Boy, and in this video, I want to go over WorkHorse stock again, but I also want to read through just the stock Twitch forum for WorkHorse just to see where people's heads are and just so I can give you guys my kind of reaction on this whole forum. So right now we're looking at WorkHorse on StockTwits. If you guys aren't familiar with StockTwits, I would highly advise going on StockTwits because there are a lot of great people on this platform who put very valid information that some people may not have access to. Yes, there are a lot of trolls on this site as well, but at the end of the day, if you can kind of just get through the trolls, there are some very good points that are made in these forums. And I believe that if you are a stock investor, you should be on this platform just to get more information and more insight, and also just build a community with other people who are in the same boat as you. So when you're by yourself and you don't know whether to hold or to buy or to sell, when you go to StockTwits, there's a community of people who are also in the same boat as you. And so it does give you some peace of mind knowing that there's other people that are in that same situation. So you can see WorkHorse is a very hot stock right now. Already since this little bit I've been speaking, we've already had 18 new posts right now. So you have a lot of people who are just bullish. I'm just seeing a lot of bullish here on WorkHorse. So again, another 23 posts that just came in right now. Just a lot of bullish people on this platform, specifically here for WorkHorse. And so I love to see that because again, these are the people who are holding the stock. And one thing to be cautious about, in my opinion, on StockTwits is what I call paid bashers. These are people who play both sides of the run up. They hedge their long position with some short options. And so what they do with that is when the price is going up, they'll short the stock, they'll say some stuff in the comments that might get some people rattled up, that might make them sell, but that only helps them make money on their short position, but at the same time, they also have a long position. So just be very confident with your picks when you are on that forum because there are a lot of trolls out there that will try to get you to sell. And so overall, I believe that people understand what's going on with WorkHorse. They know that this could be another AMC GameStop type of play. And so when people ask me, would you rather be in AMC or would you rather be in WorkHorse? I personally would want to be in a company that is worth less. And so what I mean by that is WorkHorse right now is trading at a $1.92 billion market cap. And if we search AMC here, AMC right now is trading at almost $30 billion. And so if you look at what you're paying for the company at this moment in time, I clearly would pick a WorkHorse. I believe that there is higher risk with AMC at these prices than there is with buying WorkHorse. And so on a simple valuation basis, I'm taking WorkHorse over AMC. Does that mean AMC can't get to 100, 200? No, it definitely can because there's a lot of eyes on this, a lot of news, a lot of people are starting to hop on the bandwagon of AMC. So I do believe that there could be possibilities for it to go higher, but just remember the market cap that it's trading at. There's more room for WorkHorse to go up than there is for AMC's market cap to go up. And so that's kind of where I see the divergence in both plays. I believe that if you have got in at AMC at $2, $3, $4, it's not a bad idea to take your profits and run at this point. There's just other plays that you can make more money at and at cheaper valuations. And so that is why I prefer WorkHorse over AMC for all of you guys who have been asking me about that. And so right now we're looking at WorkHorse on the 30-minute time frame. We were up 11.76%. Very volatile day today. We tested highs today of around $17.35. And so we've had a pretty strong run up from this point. You could see that we are starting to set higher lows right now with WorkHorse. My fear is in the short term that all of these call options that are going to expire on the Friday are going to bring our price down in the short term, but that is not a bad thing. If you can get WorkHorse at a cheaper price, why not? So if I pull this out onto our daily time frame, remember there is still a slight gap here that needs to get filled eventually on our 50 SMA, but look at the volume that we have seen on this stock. This has been going crazy recently, and so I do expect us to backtest this point some point in time. And when that happens, I do think this is where people should be loading the boat. This is the last SMA. It's the bottom one. Everything else is above. Just look at where our 200-day SMA is. Our 200-day SMA is trading at $20, and our stock right now is at 15. And in my experience, anytime you can get a stock under its 200-day SMA, the risk to reward ratio is definitely in your favor instead of buying a stock that is well above all of its SMAs, like buying WorkHorse at this point in time. When it was about all of its SMAs, it is a lot riskier than buying it when it's all the way down here below all of the SMAs. And so since we are above our 50, I am extremely bullish on WorkHorse. If we somehow break below our 50 SMA, that is when you would want to be a little bit more cautious with WorkHorse, because that's when the price could start to make more moves and larger moves to the downside, but we are not there and we are nowhere close to that point. So what I expect to see with WorkHorse is our 50 SMA start to curl up again, get a little bit closer to our 200 and our 100-day SMA. And so at that point, I do think WorkHorse is going to have some larger moves to the upside. There's still a pretty large gap to fill to the upside here at around $31. And so that is my short-term price prediction on WorkHorse. I do think it can get to that $31 level. And so at that point, if people decide to short, I think that's when you could start to see the major short squeeze. I don't think we have seen anything just yet. I think what is yet to come could be a lot bigger than what we're seeing right now. And so in my opinion, if you want to play WorkHorse and you want to play it the best that you can, don't buy options. If you do buy options, buy them well out in the future so that you have a lot of cushion room for your stock to go up and therefore your appreciation to go up as well. But if you don't want to worry about your expiration going worthless, just buy and hold WorkHorse. It's a very simple play. It's the highest shorted stock right now. And so overall, we're starting to see a lot of EVs just squeezing up a bit, but don't get fooled by hopping into all of these plays. Just narrow in on one of them. This is what we did with AMC. We weren't looking at GameStop. We weren't looking at BlackBerry. We weren't looking at any of these other plays. We locked in on AMC. We made our profits. Now here we are with WorkHorse and we're locked in again. We are focused on Clover. We aren't focused on anything else that's squeezing. We want to just make sure and we want to maximize what we can with the current stock we're looking at. And so with WorkHorse, if you want to see the profits, you have to zone in on it. You can't just take money, place it everywhere, because that diversification is actually going to hurt your portfolio in the long run. And so again, I'm not saying go all in on WorkHorse, but having some part of your portfolio exposed to certain plays like this, in my opinion, is just a fun experience, because when you have a speculation play like WorkHorse that isn't the majority of your portfolio, there is some excitement to look forward to, because it's not too much pressure holding it even if you lose your entire investment, but the upside could be crazy. And so it's just very fun to be in the movement, to see something go up really crazy. And so for the last couple days, our volume has just been extraordinary. We have had people selling right here. That is what is known as divergence. So that does let me know that we probably will get a back test of our 50 at some point in time. And so with that being said, I am not going to be the one to try to short this stock, because that is playing with extreme fire. And so I do believe the hedge funds are starting to realize that shorting some stocks as aggressively as they do eventually backfire on you. And so that is starting to happen with a lot of these plays that they have been running down. So because the inflation fears keep going up, common sense is telling a lot of these hedge funds to short all of these plays. But as you short them, there are apes out there like us that will just buy and hold these shares, and it will just screw them over. And so if you're with me on this one, give this video a big thumbs up. We're very close to 4K subscribers. I would love that if we can get there sometime this week. If you guys enjoyed this quick little update video, don't forget to like. We are on the road to 10K subs, so if you made it to this point, feel free to hit that subscription button. This is Dummy Boy Finance. I'm Dummy Boy, and I'll see you guys in the next one.